I think it's important for us just to give the viewers some perspective on, post-election and what we think sort of a change in administration and the impact it might have near-term, long-term on markets, on stimulus, on COVID response. What are the odds of a stimulus package between now and the end of the year?
I would say they're pretty high, just because you think, what are the odds of increased lockdowns? Those are very high.
Right.
And Mitch McConnell has already said, hey, maybe we could do something before year end. So I think either the virus situation is bad enough or the economic data situation gets bad enough that they just have to.
Right. I mean, get more if we keep getting more layoffs into the end of the year, and if we see the unemployment rate, although it has reversed a bit, if we see it start to grow, I think you're going to get a lot of pressure. And we've seen even the rhetoric from most Republicans change to, we need to make sure we're helping out the states as well in some of these instances where they're falling behind on their funding for programs.
Mm-hmm.
So
and any shortfall in stimulus between now and year end will get cleared up once the new administration steps in all likelihood. If there isn't stimulus where there should have been stimulus because the new Congress or Joe Biden want to wait and put their stamp on it, then all that means is you're going to get more stimulus later.
Yeah.
But either way, Americans and states, it looks like they will likely be made whole, so to speak.
Right. And what do you think in terms of the Fed actions between now and the end of the year and post administration change will do for monetary support?
Yeah, I mean the Fed has been all in at the poker table since April, and they have shown absolutely no signs of being willing to pull back any type of support. Their view has been that there is no reason for them to not be as accommodative as possible, because the downside of them not doing enough is far greater than the downside of them doing too much in their view. So they're in all likelihood, the Fed is going to overdo it.
Right.
We've talked about that as a upside risk is, we've just overdone stimulus. And the checks and balances in Congress mean, you might not get an overdoing of stimulus on the fiscal side, but on the Fed side, when you've increased your balance sheet by $4 trillion, a rounding error is you're off by 500 billion.
Yeah, what's another trillion, right?
Right.
Yeah,
and exactly. And then what's another trillion? So they're going to be there. That's another reason why we go back to, markets and Americans and states are going to be made whole. Is not only is the administration that comes in February going to fill any gaps in stimulus, but the Fed will be filling those gaps all along the way and doing whatever they can to make sure financial markets stay functioning.
Which makes you feel good as an investor that they're going to prevent any type of market sell-off or take those left tail events out of the equation very rapidly, and then the fiscal stimulus will be able to really improve the outcomes there. So one of the interesting things is we've actually seen rates start to rise a bit just recently. Maybe comment on why we've seen that and what sort of impact that has on the economy, and what would the Fed do at some point if rates rise too fast?
Yeah, longer term interest rates are starting to gently rise, and it's important to understand that they're coming off of extremely low levels, extremely low nominal interest rates and extremely low real interest rates, all-time lows. So this gentle rise that we've seen, really in our view, is just a reflection of the bond market saying, if I look out 5, 10, 30 years, I can expect slightly higher economic growth than I might have a few weeks ago or a month ago, because I think there's going to be more fiscal stimulus. If we do have more blue in Congress, that seems likely. And fiscal stimulus, at least in the near term, does a good job of boosting economic growth. And then also, hey, a vaccine means we could return to normal quicker than expected. So a gentle rise in longer term interest rates at at some level very welcome by the Fed. And it signals, hey, maybe I don't have to do as much. Maybe the economic picture is getting better. The bond market is a great forward-looking tool. And that's what that is saying to the Fed. But keep in mind, there is a point where if long-term interest rates rise too much, asset prices fall.
Right.
And that is where the Fed would make sure that cannot happen.
Yeah.
Also, there's a point where if long-term interest rates rise too much, the fiscal deficit gets a little bit unruly and unmanageable, and they're going to make sure that they can avoid that. So
Right.
a gentle rise in longer-term rates is a welcome sign, particularly for the value areas of the market and the financials. And I don't think the Fed has a problem with it at all. But if they were to rise too rapidly, then the Fed could easily pull back a little support and get those more in line.
Right. Yeah, I think what we're essentially saying is that rates will be range bound. However, I think what's changed recently is the probability of us going to negative rates has declined dramatically. That we're now at a point where there's enough fiscal stimulus, or at least talk of fiscal stimulus, that the Fed actions won't require us to take rates negative, perhaps as highly expected as we used to think it might be.
Yeah. A good way to look at it is say, formally or informally, there's going to be a cap on long-term rates. Similar to what happened coming out of World War II the last time our fiscal deficit was in this type of situation. Because the Fed knows that they've done all they can do, and if the economy is going to recover, it's going to require fiscal stimulus. The Fed knows the government deficit, and they know that, hey, if this fiscal stimulus is going to come, somebody needs to buy this debt.
Right.
At a very low interest rate. So either formally or informally, there's going to be a cap on longer term rates.
Yeah. And you're sort of hinting towards a topic that I think is worthy of a much deeper discussion, and that is sort of the idea around, do deficits matter at all? I think we have a lot of clients say to us, well, eventually you have to pay the bill, right? Eventually you have to pay for that. And there's a school of thought that says you don't. And that school of thought is sort of evolving politically and evolving from an academic perspective as to maybe deficits are fine long term.
In fact, some have said they're even a myth.
Some even say they're a myth. So I think it's worth that while that for the viewers, we're going to tackle this topic in much greater detail in a future episode of Uncapped, and start to lay some groundwork for what we might see as the dawn of fiscal stimulus for a long time here in this country. So until then, Mike, thanks for joining, and everyone be well.
Thank you.